So, without further ado, Tom is the CEO of Adfin. He has a very entrepreneurial approach to business, and we get on very well because of that. So, there's a reason we're talking to Adfin about lots of things, and I'll go more into that this afternoon. But for now, please welcome Tom Pope.
Thank you very much. Thank you, mate. Thank you. All right, can everyone hear me? Brilliant. Wow, what an event. Just before he goes off stage, can we have a little round of applause for this amazing thing that these guys have put on? It's incredible. So good. When Johan said, oh, we're going to have an event and we're going to invite all our customers, I was like, okay, I was envisioning a small little room, maybe the back room of a pub, something like that. And then you look at this stage and you think, bloody hell, it's mental. Very inspirational. All right, so Tom, here from Adfin. Who's here heard of Adfin? Little whoop for Adfin. Anyone using Adfin? Okay, good, right. Our goal by maybe the end of this session is to get you all signed up. Next year, we want you all using Adfin. But today, I'm going to talk a little bit about payments. 5 things you might not know. It's going to be a little bit interactive, so I hope everyone's had some coffee. Okay. Thing 1. Payments is actually all about risk. And I'm going to warn you, by the way, this is a little bit technical, some of the things I'm talking about. Johan said this audience wanted to learn things. So I've asked my team who know more than me, and we've come up with this presentation. But payments is all about risk. Right, show of hands. Who do you think would be a better customer for a payments company, an airline or Amazon? Show of hands for the airline. Actually, I can't actually see a bloody thing. So okay, and Amazon? Okay, I think that's more votes for Amazon. Okay, so this was my favorite interview question when I used to work at WorldPay. I probably asked this question about 100 times, and there's obviously no right answer. But the answer that I would sort of err towards is actually the airline. And you might think, why the hell is that? The airline is small, Amazon is huge. Surely you want this huge Amazon customer, not this tiny little airline. Well, the answer is payments is all about risk. Now, boring payments graph. If something goes wrong in payments, what happens? Your customer, they would first of all call up their bank, right? What would you do if something went wrong with your payments? You would call up your bank and you would say, oh, I bought this thing from the airline and the airline went bust and I haven't got my money, I want my money back. And your bank, because they're your bank, would quite understandably say, yes, of course, we're your bank, we want to look after you. And they would give you your money back. But obviously, your bank is not going to bail out the airline. The customer's bank would then contact the airline's bank. So in your case, your bank. And they would say, look, this is very serious. My customer's very unhappy. Your customer, the airline, has gone bust. We've given them the money back. We want the money back ourselves, please. So the customer's bank give the customer money back, and your bank will give your customers the money back. Now, obviously, if you haven't gone bust, this is not a problem. If there's something wrong, then they'll just take the money off you. But if you've gone bust, if the airline's gone bust, there's a problem, right? Which means that that person in the top left, the person who is providing you guys as a business with your payment services, they're basically taking a credit risk position on you. And I think this is something that a lot of people don't really understand about payments, is that when you pick a payments provider, they have to assess your business. They have to perform a credit check on you. Because if something goes wrong with your business, they're the ones left holding the can. So coming back to the example of an airline versus Amazon, who is the more risky customer there? Well, quite clearly the airline, right? Like airlines sell tickets to you and it might be 6 months before you fly. So that's 6 months where they've got your money, but they could go bust. And airlines go bust a lot, right, as we know. So that means you've got a very long window where a very risky business might go bust. It happens quite a lot, which means airline payments are quite risky, which means they're also quite lucrative for payments companies. They can charge a lot for taking that risk. So payments is all about risk. More risky businesses generally cost more money to process, charges more. Now you might think, well, why the hell do I care about this? This is great. I'm not an airline. I'm an accountant. I don't need to know this information. Well, point 2. A lot of small businesses are actually completely mispriced because of this. Here's a little example. All right? So let's take a small accounting practice and let's take a small e-com business. So for a small e-com business, it might take, say, 5 days from taking the payment to delivering the goods, right? For a small accounting practice, well, it's not really relevant, right? Like you kind of deliver services on an ongoing basis. How likely is a small e-com shop to go bust? Like, pretty likely, right? They come and go all the time. How likely are your businesses to go bust? A lot less likely. Fraud. A lot of people try and defraud e-com merchants. Quite good, right? Like, if you can get some goods from an e-com merchant without having to pay for them, those goods have got value, right? They've got something that they can go sell on eBay or something like that. So the fraud risk is quite high with e-com shops. Friendly fraud, which is the worst sort of fraud, that's when people are knowingly, as a customer, defrauding the business, also very, very high, right? People quite often will buy something from a web shop, they'll call up their bank because of that process I showed you and said, oh, I never actually got it. The man never delivered it. And then they'll sell the good online for whatever its value is. I get the money back from the bank, their quid's in, but obviously the merchant's out of pocket. They've lost the money and the goods. And how predictable are sales for an e-com business? Super low, right? So you'd think, hey, all these things make a small e-com shop super, super risky to process. But what does Stripe charge a small e-com shop? The same thing as they charge you guys, right? They charge them 1.5% plus 20p. It makes absolutely no sense. It makes no sense at all. And the reason is because the market has just not yet evolved to properly assess the different risks of different businesses. So point one was payments is all about risk. Point two is about, well, actually, there's a lot of mispricing of that risk going on. And actually, a lot of the people in this room are the victim of that. Yeah, small, confused face. Now, one of the things that's good about small e-com businesses, of course, is they're getting paid before they do the work. And I think one of the sort of the themes for accountants is, when do you actually need to get paid? Now, some businesses will always never be able to charge up front, right? I don't think anyone would ever pay their builder for work before the builder starts work. You'd be literally insane to do that. Anyone who's had building work knows that. So, something like trades construction, that's always going to be invoiced well after the fact. Other sectors have been quite good at shifting that forward, right? Like, no one now, when they pick up their car from the garage, would not just pay it then and there, right? The garage is not going to say, oh, don't you worry, I'll send you an invoice in a month's time, you can pay me. Likewise, things like vets, dental treatment, all of that stuff, right? When you have the work, you pay. Accountants have come some way on this journey. You're certainly a long way ahead of lawyers, but there's still an awful lot of accountants we work with that don't pay, that don't get the money up front. I'm kind of wondering why that is, right? I think some of it's just ingrained practice, just that's the way business has always been done. And some of it is just in operations. It's kind of hard sometimes to get paid up front. It's hard to make that work. And I guess little shameless plug number one for why we're here today is that's why it's so important to us to be partnered with Engager, right? Because if we can make the operational side of collecting payment really easy, by really integrating tightly what we're doing with the practice management system that Engager offers, then that makes it much easier to get paid up front, right? So myth number three, it is actually quite easy to get paid up front for stuff. You just need to operationally make sure that's really efficient. Now, direct debit. Direct debit is, I think, the favorite way for accountants to get paid. But there's an awful lot of noise about it. Who here has heard of direct debit chargebacks? Yes. Who here is scared of direct debit chargebacks? Always, exactly, right? This is this is the topic we've heard a lot from accountants as we've launched in this space. Fact number four, most of these direct debit chargeback claims, I'd almost say all, are actually invalid, like totally illegitimate, not valid. We're going to have a little show of hands here. I'm going to put some stuff on the board, and if it's true, you're going to put your hand in the air and yell something. So is it true that a customer can make an indemnity claim on a direct debit for any time in the past? Yes. No. It's not true. This is myth number one, right? People think that if they accept direct debit, that their customers have this, forever right to dispute a transaction. However, what I will say, it is 6 years, so it is quite a long time. So the people who shouted yes, maybe you do have a point. So a customer with direct debit can raise an indemnity claim, which is the technical term for a direct debit chargeback, for 6 years in the past. Right, so that is obviously, I can understand the people who are concerned who might think, hang on, I've been doing work for this person for 6 years, and then they could charge back something that happened 6 years ago. Kind of crazy. All right, what happens if you switch direct debit provider? If you migrate from Go Cardless to Adfin, does that reset the clock on claims? True or false? Shout for true. True, true. People think true. Anyone think false? Yeah? Okay. I'm not getting much feedback here, guys. I need a bit more noise. It's a long way from here to the back of this room. It's false, I'm afraid. I wish it was true. It would make our life a lot easier if it was true, but it is actually false. Switching direct debit provider doesn't actually reset the clock on claims. If you have terminated a relationship with an old provider, technically speaking, your customer can still raise a claim even if you've terminated your relationship with your old provider. However, it can help. The reason it can help is direct debit is a 1970s clunky old system that until recently relied on a hell of a lot of faxes and emails and things like that between banks. And there is a lot of evidence that in some cases, if you've been shown to terminate a relationship with your old provider and move to another one, that the banks would see, okay, that's quite clear. They've gone from one thing to another thing. That relationship was over, and that has helped some people make claims. But technically speaking, it is actually false. What about if you just give the customer a new mandate? Does that help? True? True? Anyone think true? Anyone think false? False. Yes, it's very much false, this. It's like the last thing. If you do a new mandate, it's not technically going to help, but it has been shown to help in some situations. Right, you'd be forgiven at this point for thinking, bloody hell, this is all quite complicated, right? This is a bit of a mess. So let's keep going. A customer can make a claim if they're unhappy with the service I provided. Is that true or false? True. False. This is one of the biggest misconceptions. Okay, this is not like a card payment. In card payments, this is true, right? In card payments, you have goods and services protection when you pay for something with a card. So this applies to you guys as consumers, right? If you, to some extent, right, like even if you booked a hotel and the hotel on its website said there's a lovely view of a palm reef, and when you got to the hotel, there was not a lovely view of a palm reef, you could just see a, I don't know, rubbish tip. That is actually a legitimate ground for a card chargeback, and you could raise a dispute and say, well, the goods and services were advertised as X and I got Y, you would get your money back. That is not the case with direct debit. Direct debit has no goods or service protection whatsoever. A customer can make a claim if the services I provided are legitimately not as per our contract. So what if you've got a contract with your customer that says you're going to do X, and actually you didn't do X, right? You know, you said you were going to provide payroll services and you didn't do it. Can a customer charge back then? Yes. Yes, yes, yes. I want a bit more. Come on, give me yes or no. Yes? No. No, 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 you cannot. You have no goods or services protection at all on direct debit. So what the hell can they claim for? What's all the fuss about, right? Why is all this noise about direct debit? Basically just one thing, okay? Payments errors. That is all you can claim for with direct debit. And this is the most misunderstood thing, I think. And I think we've just kind of slightly proven that amongst accountants. Direct debit gives your customers basically no protection against any form of dispute other than if you've made a mistake taking the payment. What does that mean? It means, you know, you made a double payment, right? You were supposed to take $2,000 and you took it twice for some reason. Then in that situation, your customer should get the money back. But you know, if you sign a customer up for $2,000 a month to do something and you don't do it at all, then you would think that the customer would have a right to take that money back from you. They don't, right? They don't under the direct debit scheme rules. So, oh, no, I've gone back. Why then is there so much noise about this? This is our view on this at Adfin. Your current provider, whoever they are, is probably, well, quite clearly not doing enough to actually help you navigate this. I think the fact that direct debit has been adopted so broadly by accountants has probably gone a little bit ahead of the training, the knowledge, and the toolkit from the underlying providers, right? A system that was built for utility bills and, you know, still to this day, most of its volume is the big 6 utility providers, is now being used in ways that weren't quite understood and pushed out. And actually, a lot of the providers, I don't think, are doing a good job supporting the people who now use it. So, Adfin has an announcement to make. We're releasing a new product. Woohoo! Thank you. Nikki, I paid you to whoop. I didn't hear it. We're announcing a new product. This product, we've come up with the brilliant, genius name of Adfin Protect. And we're quite excited about this because we're going to do 3 things that it's not done today at all. Number 1, we provide full human support throughout a direct debit indemnity claim. Kind of basic, right? But if someone is going to charge back 6 years of your business, that could be an enormously impactful thing for you. That could probably take your business down. I think it's pretty reasonable that as your payment provider, we're going to provide an actual human who is going to help you navigate that process. Not rocket science, but thing 1. Thing 2 is rocket science. Thing two, I don't think anyone else has yet done or cracked or figured out how to do, so we're quite excited about this. Thing two is we're going to give you direct access for the first time to the bank's portal to make your defense. That sounds very technical. What does it mean? Right now, most direct debit providers treat all of their customers as a big mass, and they amalgamate them into one direct debit scheme member. That's because that's the way it used to be and the way it used to work, and there's lots of technical reasons why that was the case. Adfin's new direct debit product, which we're releasing, I'll announce quite soon, but that new direct debit product is going to make the accountant for the first time an actual participant in the direct debit scheme. Why does that matter? It means that if something happens to you, instead of you all being in a big blob and the provider here sitting between you and the scheme and all the rules, you are actually going to have access to the scheme to make your own defense. And there is a portal, right, which you guys will never have seen or used because it's not available to you yet. But that portal actually allows you to defend yourself. And it's important that you defend yourself because, as we've already learned, most claims are invalid, right? So if someone raises a claim against you, it will almost certainly not be valid. So you need to defend it. You need to have access to that tool to defend that claim. And if things go really bad, and I really hope this doesn't happen, but I have heard examples of this, then because these are actually illegitimate claims, they are also illegal. It is fraud, right? It is straightforward fraud for a customer of yours to make a chargeback, get that money back through direct debit if it's not legitimate, which means a small claims court could be the worst course of action. It will rule in your favor. It has to. The rules are super, super clear. And if that happens, we have prepared a preparation pack, and as part of that support we're going to give you, we will help you through that process. I really hope this doesn't actually happen, but if it does, we're there. So yeah, we're excited. We think this is the first time this has ever been done in the industry. We think it's completely unique to us, and it's not going to be for any extra fees, at least not for the people in this room. New customers in a couple of months, we might have to have a small extra charge, but it's going to be essentially free. So yeah, Adfin Protect coming in the next couple of months. Now, doing all your payments properly. This was, I think the title of the topic was 5 misconceptions. Maybe a misconception is that if you want to have professional grade proper payments, it's super hard and it's super expensive. Obviously, I'm going to say no, it's not. Adfin, winky face. Small plug for Adfin, right? Like, in case you haven't heard of us, what do we do? So we make payments easier, cheaper, faster. How do we do that? Well, we bring everything into one place, your cards, your bank payments, your open banking. We're going to release manual bank transfers in the next couple of months so that if you really want a very low-cost way of making payments that is a pain in the ass for your customer but cheap for you, you can do that through us as well. You might ask, why do it through Adfin if I've got it happening and it's working today? Well, the advantage is we will chase it for you. We'll mark it as paid automatically. We will also give you some enhanced information about the payments, which matters to some of the larger value bills. So we can give you the exact payer name and address and things like that for AML purposes. So it will be very, very cheap. And that will give you basically all your payments in one platform. We make the reconciliation really simple with Xero and QuickBooks. And I think, very importantly, human support, proper human support based in the UK with the Adfin Protect benefit. So we make payments easy. We also make them cheaper, right? Bringing everything into one place generally helps you save money. So we don't have tiers, we don't have minimum fees and all that nonsense. And we have a thing called the ABC Club, the Accountants and Bookkeepers Club, which can get, for smaller practices, can get the fee down to 0% plus 20p, adfin.com/ABC for that. And that's all about you guys working with us, with your customers. If you do that, then you get cheaper payments. And then lastly, faster. Right, so really nice, beautiful payment experiences generally make happy clients. Happy clients come back for more. Happy clients probably might pay more over time. We do all the chasing, and we're also starting to automate little nudges and incentives, right? So you can do things like offer prompt payment discounts and stuff like that. So that's Adfin, easier, cheaper, faster. And then what have we learned today? So number one, payments is actually all about risk. Amazon versus the airline. Airline's probably better. You could debate it, but high risk, basically high risk payments generally cost more. Number two, many small merchants, including you guys, are actually mispriced. You are not a risky bunch. You are unfortunately quite a low risk, not boring, I'm not going to say boring, but you are fundamentally a pretty safe bunch of people. You should not be paying for high risk payments. Number 3, you do not need to get work before you get paid, right? You can, especially through things like our integration with Engager, you can make it easier to collect payment upfront instantly. We learned a lot about direct debit. Hopefully everyone learned a bit today, and we can go spread the word, right? Like, let's try and destroy some of these myths about direct debit. Most claims are invalid. The issue is you don't have the proper support and the proper tools to defend yourselves today, hence Adfin Protect. And then lastly, this is not hard or expensive to solve, right? That's why we started this business, to help you guys. So that's it for me. Thank you very much to all the early Adfin adopters. Thank you everyone for listening. We're super humbled that in our first year, we've made such great friends with people like Engager, who we just think are the bee's knees. So yeah, really great to be here and see some of you at the drinks tonight, perhaps. Thank you very much.